Buenas tardes. Welcome to Miami. I could watch that video every morning. I actually do watch that video every morning. My name is David Whitaker. I have the privilege and honor of being the president and CEO of the Greater Miami Convention and Visitor Bureau. What that simply means is I have the honor and privilege of welcoming visitors, meeting delegates, event delegates to this amazing destination. So for those of you who are visiting us from out of town, welcome. Welcome to one of the greatest destinations in North America, if not the world, and an emerging technology destination, which you're going to hear a little bit about today. As an example, we're in the Convention and Visitor Bureau space. We book traditional conventions at our Miami Beach Convention Center. This May, we've just recently penned a contract with an organization out of Seattle. We'll be having a Bitcoin conference welcoming over 35,000 delegates. That's all you need to hear in terms of the economic impact that we know that this industry can have on our meetings and event space, not to mention the incredible economic impact and social impact, which you're going to hear a lot about today. Let me take this moment as well in the hospitality business to welcome the chairman of our board, Bruce Oros. Bruce is here. Thank you, Bruce. Bruce signs all of our checks, so if you want a sponsorship from the Greater Miami Convention and Visitor Bureau, you'll talk to Bruce. And really, just real quickly, Marty Tejeda and Joe McCrae, if you could just stand for a second. If you have any interest in bringing your event, your convention, a meeting that you may serve on the board or be an advisor to, you obviously see the incredible capacity of this amazing hotel, but also the destination. And so we're interested in hosting as many of you as possible. So if you have any interest in talking to us about bringing a convention or a meeting to this destination, please reach out to Joe or Marty, or we'll reach out to you. Speaking of amazing partners, we have 3 incredible panelists that I have the privilege of introducing, and then an incredible narrator. So let me jump right into it in kind of alphabetical order. We first have David Bailey. David is the co-founder and CEO of BTC Inc. And as the co-founder and chief executive of BTC, David Bailey is an industry leader and evangelist for the hyper-Bitcoinized, did I say that right? Hyper-Bitcoinized future. Since 2013, BTC Inc. has grown to offer critical intelligence, brand building expertise, and technical incubation specialty for the Bitcoin ecosystem, as well as industry-leading projects like Bitcoin Magazine, Carrot, and the Bitcoin 2021, now called, of course, soon Bitcoin 2022 conference. David sits on the board of advisors for the University of Alabama, was a managing partner at, I'm going to forgive you about that here in Miami, was a managing partner at 402 Digital Partners and one of the earliest Bitcoin funds. He's currently general partner for UTXO Management and is an active angel investor in the Bitcoin ecosystem. Welcome, David Bailey. Second, we have let's hear it for David. Second, we have Frank Gonzalez. And Frank, you have the longest title, this may be a record, that I have ever had the privilege of. You must have a really big business card or Bitcoin card, but Frank is the senior leader, financial institution, specialty finance practice, and assurance leader for BDO USA. Welcome. As part of the firm's audit and assurance team, Frank provides audit, business consulting, SEC compliance, and advisory services to organizations in a wide range of industries. He oversees the assurance practice for the financial institutions and banking industry. Frank is highly experienced in the rigorous regulatory and compliance standards applied to the industry and works with both domestic and international organizations. He has experience in performing audits and advisory services to institutions ranging in size from billion-dollar multinationals to the de nuevo startup institutions. Frank works with clients to accomplish financial and operational objectives. He is skilled in first-time through audit engagements and providing audit and business advisory services to public and privately held companies. Again, welcome, Frank Gonzalez. And last, let's welcome Neil Schwarm. Neil is the founding partner of L1 Digital AG. He is not only that, but the L1 Digital AG is a premier Zurich-based investment firm concentrating exclusively on digital asset investments globally. A primary focus of L1's digital is a focus on companies, technologies, and protocols disrupting financial market infrastructure and services. Needless to say, he's very busy these days. Neil has been involved in the technology and asset management industries for over 25 years. He started when he was very young, and he's having served in senior risk operational technology roles in asset managers, media firms, family offices, hedge funds in both the U.S., Europe, and Latin America. Again, welcome, Neil. And then to bring this panel together, an incredible moderator who I have the privilege of knowing and serving with in a variety of capacities here in Miami, and that is, of course, Jarrett Davis. Jarrett is the co-managing shareholder of the Miami office of Greenberg Traurig, one of Miami's top law firms, if not one of the nation's, and one of the global leaders. He's also a member of the firm's global executive committee. He oversees approximately 170 attorneys and 200 business staff based in the firm's headquarter office here in Miami. Jarrett has led the efforts in the Miami office and played a key role in the firm's global efforts to be a dominant player in information technology and life sciences biotech industries. Jarrett currently serves as chairman of the board of directors of Nicholas Children's Hospital, one of the largest health systems in the state of Florida, and a thought leader at leveraging digital health solutions, and serves as co-founder and general counsel of the Emerge America's Global Technology Conference we recently hosted here. He recently served as chair of the Miami-Dade Beacon Council, our economic development agency. He's also counsel to us. He gives us tremendous guidance. This is right up his wheelhouse. He's going to lead the panel of experts through a very rigorous discussion. Jarrett, let me take it over to you. Welcome, everyone, again.
Thank you, David. That's true. I shouldn't wear that. Frank was kind enough to show me he has his mask as the Nicholas Children's Hospital mask, so I'll hold that up as a quick commercial. Good afternoon, everyone. Thank you, David. Welcome to plenary session 7 of the World Strategic Forum. As David mentioned by that overly generous intro, I'm Jarrett Davis, and I have the privilege of serving as the managing partner of the Miami office of the international law firm of Greenberg Traurig. Our firm has been a thought leader in various areas of technology, ranging from IT infrastructure, SaaS solutions, data privacy, and cybersecurity, in which we're actually ranked one at the top in the nation, as well as life sciences and biotech. However, in particular, we have an extraordinarily strong bench in the fintech space. The matters we facilitated have ranged from leading deals in technology in the money service business arena, as well as various technologies disrupting traditional banking, ranging to our blockchain task force, which has won numerous industry awards for the work we're doing in all areas of cryptocurrency, NFTs, and other blockchain applications. Today's plenary session is designed to address a broad but important concept: how to promote the fintech industry and where that industry is headed. It's appropriate that we address this topic in Miami. As many of you are aware, for some time now, Miami has seen an explosion of activity in the fintech space. Quite frankly, along with an explosion of other activity in other sectors of technology and the fun activities. We seem to be evolving into the epicenter of the universe slowly but surely. One only needs to see some of the recent deal flow coming out of the city and moving here. From New York startup Bank Novo, to Hispanic consumer-focused challenger Bank Fortu, to the launch of digital bank Nirvana by former PayPal CEO Bill Harris, fintech players from across the country and the hemisphere are moving to Miami to make it home. Just a few months ago, migrant-focused Swedish mobile bank app Majority cut the ribbon on its new office at Community Center in Miami. Of course, this activity stood on the shoulders of an already fertile ecosystem in which Miami originated fintech scale-ups and startups like Nova Payment, FinConnecta, Milo, and of course, Visa acquired Yellow Pepper had already been experiencing rapid growth and seen a fertile ground for financial and talent support. And of course, this trend in Miami has truly manifested itself in the success Miami has had and attracting a wide and diverse array of players in the blockchain arena, with the area truly demonstrating the power of cryptocurrencies to become viable alternatives to fiat currency. Perfect examples of this would be Miami hosting the Bitcoin conference, which was mentioned earlier, largest Bitcoin event in the world, which appears to be on a continuing trend to come here. Miami Mayor Francis Suarez, who has committed to spend day and night working to make Miami into a hub of crypto innovation, has lived up to that commitment by launching the first municipal token, the Miami Coin. The fact that our basketball arena is now named the FTX Arena is no coincidence. This town has truly embraced fintech. And so to host this conversation, the World Strategic Forum has partnered with our dear friends at the Greater Miami Convention and Visitors Bureau, the leading and most innovative destination marketing organization in the world. To hold this conversation, we have gathered a group of panelists today who have each played and continue to play an integral role in building the global fintech ecosystem. They'll help us delve into this discussion of what are the factors that will assure the success of fintech companies, What are the new promising and cutting-edge developments, and how will these developments change the way we operate on a day-to-day basis? Now, David's been kind enough to introduce each of you, but I find that self-introductions help tremendously. I'm going to mention each of your names. This is your time to give your organization its plug. Tell us a little bit about your organization, your role in it, and the relevancy to building the fintech ecosystem. David, we'll start with you.
Yeah, well, first, thank you for having me. Anthony Scaramucci, 3IQ. You know, if I had known I was coming to a Bitcoin conference, I would have worn a Bitcoin t-shirt, so don't hold that against me. So I own Bitcoin Magazine. I've been involved in Bitcoin since 2012. I've made, lost, and made fortunes. It's a volatile industry. We had the honor of bringing the Bitcoin conference here to Miami in June of this year, and look forward to bringing it again in April. You know, I do have a quick question. Who in the room owns Bitcoin? All right, cool. Does anybody have a company or business that accepts Bitcoin or the business that owns Bitcoin? All right. And then, did anyone make it to the Bitcoin conference in June from this group? Let's see, 1, 2, 3. Oh, all right, 4, 5. Sweet, cool. I hope you had a good time. All right. We'll come back to this later.
I like the setup there. To the right, to his right, Frank Gonzalez.
Thank you, Jared, and thank you for having me today. So hopefully what I add to the group is I've been in the accounting and regulatory business for about 30 years, working with a lot of the large international firms, both nationally and international, and I've had the ability to work pretty much my entire career with financial institutions, obviously a lot in the banking world, and now most recently in the fintech world. And obviously, as we know, internationally, nationally, and locally, especially, the banking world and the technology world is merging, and it's coming together, and there's a lot of advantages of both groups working together. And I've had the opportunity to work with many companies, again, locally and internationally, and I think we're going to get into a little bit on, you know, what's going on from a regulatory standpoint and from an accounting standpoint. You know, I've had the privilege to work with companies and dealing with issues that are presently on the table with the SEC, and government agencies and banking agencies such as the OCC and the Federal Reserve and the FDIC. And those are things that are affecting regular fintech companies, affecting big-time Bitcoin companies. And there's things here and there that I'm sure we'll get into. So thank you so much for having me.
Perfect. Thanks, Frank. And then to his right, Neil.
Hi, thanks for having me. Glad to be here with you all. And thank you for the hosts for inviting me. So L1 Digital AG is a Zurich-based asset manager. So we are technically an advisor that has several fund vehicles. The principle of the business is to be a conduit for Swiss institutional capital, which is typically pension funds, insurance companies, high net worth individuals, family offices, typical large institutional and professional investors, to be a conduit for that type of capital into the global crypto markets. So we run a couple of funds, launching another one shortly, that invest in crypto markets through a variety of ways, through other asset managers, into companies, into protocols, into various projects. And we've been running the first portfolio since November of 2018, but had been involved in this space since about 4 or 5 years earlier than that. So our role is to look at all crypto projects, currencies, protocols. We'll get into like what the difference between these things are, what they exactly are, I think, in this conversation. But it means looking at the entire space and looking at the economy and how those projects best fit into the thesis of what we'll get into, which is we call Web 3.0, which is the composable internet. I don't want to get too technical right now, but it's a very important concept, I think, to hopefully bring away from this, to get a really good understanding of what Bitcoin and cryptocurrencies are and what their power is over time.
Perfect. All right, so gentlemen, I want to go from the micro to the macro, to the macro to the micro, really. And I find it helpful to have just kind of a structure so that people can think about our discussion. So it's really going to fall within 3 buckets. Number one, the most macro, how we got here, opportunities that are presently on the landscape as it relates to fintech. And when we say fintech, it's really going to sort of divide to 2 ways. One would be disruptive technologies with the traditional financial institutions. And then you've got, of course, crypto itself and blockchain applications. Number 2, what challenges and even opportunities are presented by, as Frank mentioned, the regulatory regimes out there. A lot of these are nascent, but they're starting to come up, and the new use cases that we're starting to see that truly impact the industry. And then finally, what the resource landscape looks like for fintechs, particularly the talent and the fundraising arenas. Frank, you're going to get the first question. Among my other roles here, I serve on, I'm putting you to work, Frank. Among my other roles, I serve on the board of directors of City National Bank, and we pride ourselves on being a disruptor ourselves. what are you seeing as the opportunities in the marketplace for traditional banks and fintechs working together? Because that really, I'll say it's almost a palpable fear within the traditional bank industry, which there should be, that they're going to be disrupted. And so, disrupted out of existence, frankly. And so, there's always folks speaking and saying, but you can partner with these fintechs, you should partner with these fintechs, you are partnering with these fintechs, but then you have the regulatory aspect. Don't address the regulatory right now. We'll get to that in a second. I don't want to overwhelm. But just generally speaking, what opportunities in the marketplace you've seen?
Yeah, so obviously it's a very hot topic, and the regulatory side does affect it, and we'll leave that for later. But what we've seen in the last couple of years, back in 2008, 2009, when the financial crisis happened, obviously banks were struggling big time. And there was a big fear in terms of what was going to happen with banks, how easy it is in terms of dealing with banks. And as a consumer and as a company, especially on the lending side, where were we going from there? And that gave a big opportunity for the fintech world to kind of step up. And financial technology companies then came in and gave a lot more ease for companies, for either companies or individuals to be able to transact and make transactions from a banking world a lot easier, obviously. And again, we won't get into it, but from a regulatory side, it was a lot easier for a fintech company to operate in this world. And then there became a fear. Everyone that was involved in the banking world, there was this big fear, including myself, because I've spent a lot of years in the banking world and I have a lot of banking clients, and we were like, okay, so fintech is going to take over, or is this the last of the banks? Are we not going to see banks anymore in the future? Which is a scary thought if you're in the banking world. But, what's happening in most recent years is, the banking world is extremely strong, has an extremely strong client base, and I think that's the key. And also, from a regulatory side, they are highly regulated, but they also have the safety measures that go along with that. So they're constantly being watched over from a regulatory standpoint, so they have to have proper cybersecurity, proper financial controls. So they're very strong from a security sense. And then you have the fintech side, which is more kind of new, provides more opportunity, especially the younger generations, to come in and do transactions. But what better world than to have both of them together? So I think what's happening now, and we're seeing more and more, especially in my industry, is the mergers, acquisitions, or the marriage of both types of organizations, basically because they need each other. From an old bank perspective, they didn't have the technology side to be able to do transactions more real time, easily accessible, and being able to do that. But then the fintech world kind of needs the client base that banks have. I mean, the client base that they have is just amazing. It's very strong. So a couple of years ago, I would have said, God, what's going to happen to the banking world? But now I think both groups together are going to work more and more together, and that's what we're seeing. So from our client base nationally, we're seeing more and more marriages or working together in terms of fintech companies and traditional banks. And I think we're going to see more of that because at the end of the day, I think they need each other more and more.
All right. Neil, let's take it beyond the banks. Let's go to the broad business and investment communities. We feel like, David's little exercise proved it best. He feels like the business community in general still doesn't quite understand the primary innovations for decentralized finance, open banking initiatives, et cetera. What are you seeing out there as the primary innovations that still aren't well understood by the broader community?
I think what's the least well understood, and when we talk about decentralized finance, typically the DeFi is a term you may have heard in the popular press and the news. And I think when we talk about DeFi and when people think about DeFi, they tend to think of traditional type of banking products done in a decentralized way. And that's certainly kind of the jumping off point. But I think what's less well understood is that decentralized finance is about more than just the movement of money and institutional assets as we know them. Bitcoin is an example. Bitcoin is many things. It is money, it's an asset, it's a commodity, it's a store of value. So it's all of these things and none of these things at the same time. So when we think about decentralized finance, it's about the ability to make a monetizable asset out of virtually anything that any particular community has value to, or puts value in. I normally use the example of eBay, and if you remember the world before there was such a thing as eBay, before there was eBay, you had a closet full of maybe old stuff, new stuff, collectible stuff, and stuff that didn't really have an objective value to it. eBay created a platform that enabled people to turn that into actual money, and we're talking about money for cash, money that people started to run businesses over, and those things became liquid assets in a very real way. And that is what decentralized finance itself does, that it enables communities that put value on certain types of products, certain types of resources, certain types of services, to make monetizable assets out of that. And again, bridging the example with eBay, imagine now you have a closet full of stuff that some bank somewhere can decide to use that to underwrite a mortgage, to put that as collateral, and apply a loan to value and get an actual mortgage in the real world out of it. This is something that decentralized finance is actually designed to do and is doing already in many ways. And I think it's important to think about that when we think about the evolution of finance and financial services and consumer credit and things like that. So decentralized finance offers those opportunities.
You know, it's interesting. We talk so much about internet of value. And we always think about that in terms of transferring value, but it seems like it's almost the injection or recapture of value as well. So, David, I'm going to play off of the little exercise you did with Bitcoin. Share with us, you've talked extensively on the ultimate role of Bitcoin in society. Where do you see that going?
Yeah, so I guess to kind of weave a thread here, Bitcoin, and you know, I'm only focused on Bitcoin these days. The entire digital asset category is a $2 trillion asset class. Bitcoin is $1 trillion of that. So there's a lot of stuff that's encompassed in blockchain, DeFi, crypto, etc. I'm really just looking at a segment of that. Also means since I'm focused on Bitcoin, I get to be the most controversial person up here. So, you know, Bitcoin is really about separating politics and money. So we are trying to build an entirely new financial system, a new monetary system that is devoid of being captured in or controlled by the Federal Reserve, by central bankers, by global monetary policies, by regulations. We want regulations to conform to us, not us to conform to regulations. And so Bitcoin is really about bringing capitalism back into financial markets, into business markets globally. You know, half the planet does not have a bank account. 80% of the planet makes less than $10 a day. I mean, that is a tragedy beyond tragedies. Banking has been around for hundreds of years. It's not like banking just needs a couple hundred more years in order to bank those people. Those people are excluded from the system because of the regulatory regime and the restrictions placed on banks. I mean, banks would love to bank those people if they could, but they can't. So Bitcoin is really about creating a new economic system that is for all people of the world, that anyone with a cell phone can access, that the person making $1 a day or $10 a day has the exact same rights within the system that the Wall Street tycoon has. And it's really about creating a system where savings is actually a path to prosperity, rather than in today's reality where saving is really a path to poverty, and debt is actually the vehicle through success. So it really is a radical political movement. I think, to borrow Mayor Suarez's term, you know, Bitcoin ecosystem, it's a movement, not a moment. And so I think we're very, very early in the process. There's only 100 million Bitcoin users worldwide. There's 8 billion people on the planet. So we have a long ways to go, but in the just 10 years that Bitcoin has been around, it's made a lot of progress very quickly.
So consistent with my macro to micro, Neil, I'm going to give you a question as to specifically what systems and practices you think blockchain will disrupt. But before I even get there, I want to play off the regulatory comment that David made, because I think it's profound. There's almost a chicken and egg issue that I think a lot of us struggle with when it comes to cryptocurrencies and regulation, which is totally agree that if we can strip out the regulation, it'll open up the market forces will take over, et cetera. But at the same time, I think a lot of the comfort zone people want will come from that regulation. And none of us really knows the answer, but I'd love to get your thoughts on that as to that chicken and egg, if you even see it as a chicken and egg. I suspect you don't. But where do you see that coming from? What comes first? The regulation to give people the comfort to get into crypto more? And I'm not talking the cutting edge, bleeding edge folks. I'm talking the average Joe, which in order for cryptocurrencies to really get traction, you're going to require. How do we get them comfortable while at the same time freeing us, liberating us from the regulatory aspects of it?
So a few ways to answer the question. First off, we have a term in the industry called NGU technology. It stands for number go up technology. So the number one thing that sucks people into Bitcoin is the asset appreciating. You know, I bought my first Bitcoins at $10. The price of Bitcoin now is $50,000. You know, if you're someone who's standing on the sidelines watching that appreciation occur, you can only see so many hundreds of X return on investment go by before it sucks you in. So that's part of the answer. Two, in terms of do regulations provide people the comfort to enter the cryptocurrency industry? Maybe there is a degree of that, though, like, to be fair, people should not be, just because a government says that it's blessed, you should still tread carefully. It is the wild, wild west. And just because you're told that it's safe doesn't mean that all aspects of it are safe. Like, you know, it all works perfectly until something doesn't. All right. So, you know, in terms of the regulations, though, giving people comfort, I mean, the political regime and regulatory regime is hollowing out the monetary system that we currently have. Like, Bitcoin was created as a response to the current monetary policy. I mean, in the very first block of the Bitcoin network, Satoshi encoded a headline from the Financial Times: "Chancellor on the brink of second bailout." So these policy decisions are being done by the regulators. They're the cause of Bitcoin's spread and adoption. So, you know, I don't think that, you know, regulators coming in and bringing their wisdom is somehow going to, you know, really affect how Bitcoin's used or necessarily affect the growth rate. I mean, the growth rate of Bitcoin has been phenomenal, 0 to 100 million in 10 years. So I think if Bitcoin can just keep building out valuable financial services and products that people can use in their day-to-day life that are useful, it'll grow. And, you know, probably the most exciting development of this year that recently happened, at the conference this year in June, we had the president of El Salvador crash the event, announced Bitcoin as legal tender for the country of El Salvador. That was written into law in the month of July. It was put into law, into practice, September 1st. We're about 1 month deep into the experiment. Out of the 6 million person population of El Salvador, 3 million people are already using Bitcoin. 50% of the population of El Salvador is already adopted Bitcoin in 1 month. That's just incredible. And so I think that you're going to see much more of that to come.
Do we need China and U.S. involved in this? And what I mean by that, China just recently announced some pretty draconian crackdowns on Bitcoin. Can it succeed without, and I only say China and U.S. because those are the two most consequential nations in terms of raw buying power, GDP, et cetera. What are your thoughts there, just in particular in light of what China did?
Well, first off, you know, China's banned Bitcoin many times. Bitcoin's stronger than it's ever been. They banned Bitcoin. The last ban was at 40K Bitcoin prices. Today we're at 50K Bitcoin prices. So, you know, I think that China, and, you know, not to be overly arrogant, the United States needs Bitcoin more than Bitcoin needs those nations. Bitcoin is the way out of the monetary crisis that we're facing as a world. I mean, if you look at financial markets, look at equity markets, look at bond markets, look at government debt that's yielding negative interest rates, like, this is cuckoo land, and it only exists because there is no alternative to the US dollar. Bitcoin is the alternative, and it is going to change the global monetary system. And it might take 100 years, it might take 10 years, we'll see. But I think that those nations need Bitcoin more than Bitcoin needs those nations.
Fair enough. Neil, you've been very patient with me. Just on a more specific basis, what current systems and practices do you see blockchain and use of digital assets disrupting?
We believe in Bitcoin as well. But again, as I pointed out earlier, our take on digital assets and blockchain is within the context of Web 3.0. And Web 3.0, again, is a composable internet. Composable meaning that Web 2.0 was typically considered to have started in around 2007 after the iPhone was introduced. And we had now consumer-facing apps that people like ourselves, all of us, can interact with the internet directly. But we're limited to the applications that are provided to us. So we can't compose an internet ourselves. We have to kind of take it and interact with it as it's presented to us. In a Web 3.0 context, and this is important, in a Web 3.0 context, the internet is composable, or internet can be composable. So the important thing about blockchain is blockchains are chains that can interact and interoperate with each other the same way different financial systems across the world now interact with each other. So every protocol and currency, as you hear of them, are tokens that are expressions of some economic community that places value on something specific. So what that enables is, number one, communities to organize themselves in a fashion that they see fit, that economically suits them, and that is very much in the thinking of Bitcoin and an open financial system and an open internet. But the consequence for all businesses is the nature of blockchain, which is effectively open data that is available on blockchains, and that is censorship resistant, transparent, and effectively free. So what this enables in a Web 3.0, in a consumer internet context, is enables people and businesses to have not only ownership over their own data, which, as we're finding out, is one of the most valuable assets that we have, that is basically being taken advantage of by several large companies at any given time, but also small businesses to be able to harness the power of data that is available that they effectively have to pay third parties for, that may be more accessible to them through the use of blockchain technology.
Do you see blockchain as being somewhat of an equalizer between the small and medium-sized business community and large businesses?
It is absolutely an equalizer. And again, this is consistent with what David is talking about in terms of basically democratizing the nature of finance and the nature of data. And David Harris in lunch earlier pointed out that one of the biggest issues that we're starting to face, and this really became much more well established after the last financial crisis, was the nature of consumer credit and how consumer credit plays such an important and potentially detrimental role in the financial system broadly. So blockchain does act as an equalizer, where the same way 20 years ago when the first wave of the internet, you had smaller companies that were able to disrupt large companies. Companies like Yahoo displaced IBM. Microsoft came out of nowhere and came to rule the world in some ways. Now you have Facebook, despite what happened these days, didn't really exist until 2005, 2006. Now it's one of the largest and most powerful companies in the world. We tend to think that the last innovation is the last innovation, meaning we can't imagine a world any different than what we've gotten used to. But the point is that this way of using data in terms of applying blockchains is in fact very democratizing, and it will level the playing field. And it already is starting to between small businesses and large businesses, and ultimately to make them less reliant on the more established and centralized players. Again, companies that we all use, and I personally believe in: Apple, Google, Microsoft, Amazon, companies that we're all paying in some way, either through our privacy or that small companies are paying in order to be kind of noticed in the world. And I think what blockchain technology ultimately does is enable businesses to take more ownership over their own destinies.
So can I piggyback on that real quick? So just a great example I like to share with people about how Bitcoin is equalizing the playing field, or in crypto in general. There's a wallet out there called IM Token. It's just one of many wallets that exist. Chinese wallet, had a team of, say, 5 people that built it, maybe grew to a size of 10 people. Over the course of 1 year from their launch, they were able to accumulate more in deposits into their wallet, which is effectively just like a software interface for your financial services. They were able to accumulate more deposits into their wallet than Citibank's retail division with 220,000 employees. Like, it's the equivalent of what the internet did to newspaper publishers. It's the business models just can't compete. And so now anyone who has access to a computer, anyone who has the ability to code, anyone who has the ability to come up with a financial service or product that people want, they can go out, publish it on the internet, compete globally in every territory. They can take customers in every market, and they can bypass all of the bureaucratic walled gardens that have been set up over hundreds of years to keep people from being able to easily launch their own bank. Like, that's the equalizing force of digital assets.
I think if I can just make a point on that, what is the least well understood, I think, about Bitcoin and blockchain in general is that it enables everybody to be their own bank. And that's probably the most important concept, that your wallet ultimately will be your interface with the entire world and financial world, and you will have ultimately much more control over that than you do now. And this is based on the aspect of composability as well, but not requiring a centralized system that is charging you fees for what will over time be less material value delivered to you.
It's an interesting point. We always do forget that banks initially were designed to address a need. How does one store value in a way that's safe? Well, if we have a way to store that value that's safe on an individual basis, you end up disrupting the financial institution sector. Frank, we started talking about regulatory aspects. I'd like to throw it to you for the other side of the fintech world. Actually, we'll do both. talk to me about what hurdles, challenges, and opportunities you're seeing in terms of the regulatory, the accounting, et cetera, on both the sort of the open banking aspects, but also the what you see with digital assets.
Perfect. So I'll start with the not digital assets. We'll do that separate because I think there's other issues that are affecting that. But mostly from the fintech world, there's obviously opportunities. When you look at traditional banks in the financial world, obviously we started talking about how much they're regulated, and they are extremely regulated. They have to report to the FDIC, the OCC, the Federal Reserve, whatever it may be, which obviously is a tough situation because they obviously are very strict in terms of what they can and can't do. And there's also a very expensive regulatory cost that go with that. As you know, especially in the environment in South Florida and different parts of the country, Bank Secrecy Act and anti-money laundering laws are a big thing, and the banks are very held to a very strict standard when it comes to that, which again is a very expensive thing to maintain. It takes a lot of employees, it takes a lot of manpower, and it takes a lot of information that needs to be processed. And what does that mean? It means in the fintech world still is not part of that. They're not part of that regulatory structure. So there's a lot more ease of entry with regards to being able to operate and do financial transactions without having that oversight. And it's not that it's not coming. I think it's coming. But at this point in time, there's a huge opportunity for two reasons. One, they don't have that regulatory issue, so it's easier to operate and not such a strict standard. And number two, don't have the regulatory costs that go with it, which is extremely expensive. And what you're seeing, if you have your normal bank accounts at your traditional banks, you see that you've probably seen that your fees have gone up or keep going up. And that's because of the regulatory side. There's so much cost that's going on from that standpoint that they need to maintain them. They need to recover that somehow. So they're going to pass it along somehow. So that's a great advantage in terms of from a fintech company getting into it. Now, the world is evolving. The regulatory world is evolving. There's a bank that opened up in San Francisco, Vero Bank, which is, fintech type of bank, digital bank. And they finally got a special charter from the OCC to do that. So little by little, it's coming. But it's something that hopefully fintech companies can take advantage of before it gets to a full-blown regulatory issue. Now on the digital asset side, so that's a world in and of itself from a regulatory standpoint. And one of the things that we're seeing a lot of is that there are some struggles. And one of the points that was made was, what comes first, the chicken or the egg? And I think there's a chicken and the egg and a chicken and the egg within the chicken and the egg, meaning that a lot of institutional investors and conservative investors always like to have that regulatory backing. They like to have the comfort of saying there's a regulator looking at it. And this is international, not just locally in the US. But to give you the example from the US, a lot of investors are like, is it backed by the SEC? Is it regulated by the SEC? Is it something? That's where I feel a little bit more comfort. But what's happening in the digital world is the SEC is not there yet and the accounting world's not there yet. And what happens when I meant by chicken and the egg is the SEC and the regulatory environment, especially in this country, and the accounting world kind of feed off each other. And one kind of watches the other and says, what are you doing? Well, what do you think? No, but what do you think? And what's happening is that there's issues with regards to digital currency that are affecting both worlds, and it seems like everybody's kind of stalled and waiting for somebody to make a decision. And just to get into a little bit more specific, so what happens with cryptocurrency and digital assets? From an accounting perspective, there's two big issues. There's the issue of now you're dealing with an asset that's not really a hard asset that I can hold on to. There's been issues with firms declaring, well, is this a hard asset? Is it an intangible asset? Where do we place it on the balance sheet? And depending what you do there is how you classify those assets, meaning do you take it down, raise it for fair value? If the value goes up, do you not take it down? And I know I'm getting really specific, but this is one of the big issues. And then the other issue is, from a financial statement standpoint, is valuing Bitcoin and valuing cryptocurrency. Obviously, there's different exchanges. Which is the right exchange? Which is the right exchange? Which one does the accounting regulatory world use as a basis? And then the last thing is the security side of it, in terms of, is it really secure? So again, the accounting world and the regulatory world are struggling with that. And we have clients that we're dealing with that are trying to get a lot of advice on which way to go. And we have clients or mutual clients that we've talked to about that. And there's still a struggle between the regulatory world and the accounting world that hopefully little by little, there's going to be a happy medium, and they're going to decide how we're going to be able to account for that. And I think at that point, it's what's going to help the cryptocurrency market really take off. Because I think once you have that backing from the accounting world and the regulatory world and the SEC world, that just creates a lot more opportunities out there.
So do you think it's a lost cause to try and get the larger, most traditional, more institutional folks to come on board pre the regulatory change, or do we have to wait for the regulatory change to lead them?
Traditionally, it's always been the regulatory world to lead. I'm hoping that based on how the world's changed and things are changing constantly, that it would be the other way around, and the industry can dictate the regulatory side of it. But traditionally, that hasn't been the case. So we'll see.
Every major investment bank right now in the world is tiptoeing into the digital asset market. Like, again, it's the number go up technology aspect of it. Like, a bank can only sit on the sidelines so long waiting for these regulatory issues to be resolved, watching a $1 trillion market cap go to a $2 trillion market cap, go to a $10 trillion market cap. Like, is the chicken or the egg question might have made sense 6 years ago. Now we have a chicken. It's a $2 trillion chicken. So it's like, you have to act. The only losing move is to do nothing.
Well, there's another point to that also. I forget who said it, but in the end, everything is demographics, meaning banks are businesses like any other. They have to look at future markets and future market share and where their consumers are coming from and where they're not coming from. And if you're, call it, I don't know, millennial, whatever you want to do, Gen Z, whatever you want to call it, somebody that's 30, coming into their own professionally, starting to think about accruing wealth, building assets, their own financial future. Of course, the landscape for employment and wealth building continues to change, but they are not going to go to a traditional asset manager, high net worth banker or something like that to manage their assets. They're just not going to do it. They don't see the value in it anymore, and they don't trust the system. And there are, in some cases, there are legitimate reasons to look at the loads on all types of mutual funds and things like that, any fund for that matter, and start to question where the value is coming from. Now, we're not just talking about not being able to invest in Bitcoin and digital assets. We're talking about the asset management complex in general. And if those banks or any financial institution or any business for that matter doesn't account for the demographic aspect of the preference for digital assets and the use of them, and you can go look no further than people that are 15 years old that spend a lot of time and money and their parents' money on games. Now, we may consider these just games, but to them, this is the real world. And those applications extend right into the way digital asset universes work. And if banks want to maintain any franchise in the future, they will have to think about this. Otherwise, they will cease to exist at some point, and certainly in the current form.
There may be an alternative path also. I mean, having represented a number of these institutions, they tend to have phenomenal connections within the regulators. So it could be in parallel while you're being innovative, while you're pursuing these initiatives, have conversations with the regulators, say, look, you guys have given us no guidance. We're going to go forward with this program. To the extent you think you're going to do a whammy on us, let us know, and maybe we can pivot, have a conversation, things like that. Is there anyone, as much as I know we have a skepticism of the political class, is there anyone in the political class right now that's a champion for the industry?
Absolutely. I mean, the cryptocurrency industry just held up the infrastructure bill in the Senate for 3 weeks because of a provision that affected the crypto scene. I mean, you have we have an entire caucus, a Bitcoin caucus, basically, in the Senate that's bipartisan. Lummis, Wyden, Toomey, the guy out of Georgia, I'm forgetting his name, the young guy, Cruz, all on the Bitcoin train because Bitcoin is very popular. There's 40 million Bitcoin users in America. If you've ever heard the saying, people vote with their pocketbook, Bitcoin is their pocketbook. If you want to regulate Bitcoin, you're pissing off people across the entire country who really don't, they come from all different walks of political life. So there is a new political calculation that's building in Washington where people want to, we have Andrew Yang speaking at our Bitcoin conference. We have the Joe Jorgensen. People see an opportunity here from the political entrepreneurs in DC, let's say.
All right, now I want to talk about talent because, we talk about disruption, but one consequence of disruption is always there's a lag time for the talent markets to catch up. There was an article that came out last week. It was either Bloomberg or New York Times. My apologies. I'll get it for everyone. That projected that over the next 5 years, 100,000 banking jobs could either be lost or at least moved around. And so I want to talk to you guys about talent. Where do you see the talent markets being impacted? And this could go in a variety of different areas. You could talk about just simply what jobs will be lost through obsolescence, what jobs will be added, the need for educational agility to retrain people. I'm just curious to get your thoughts, and this is a jump ball question for all three of you. But where do you see the talent markets going in terms of being responsive to the industries on both sides? And I apologize for always saying both sides of the fintech aisle. It's not both sides, but I find it easier for people who don't know fintech to just think about it that way. But on both sides of the fintech aisle, where do you see the talent markets being responsive and impacted?
Well, I think first and foremost, every business, no matter if you're a laundromat or a banker of some sort, you're in the data business. I mean, this is true for laundromats, actually, that need to market themselves. You are becoming a more data-centric business, or at the very least, data, the use of data, social media is data itself, becomes a more material aspect of running your business and gaining competitive advantage. And as more businesses do realize this at every scale, they start to look at talent that aren't just data scientists, but in every aspect of employment, people who are interfacing with data in some ways. And in order to get ahead in any organization, facility with data is actually going to be one of the primary skills in order to make a career and advance. So that's generally. But more specifically, I think, again, not everybody is going to be a computer scientist. Not everybody should be a computer scientist. But I think a healthy understanding of the nature of data and its economic value, and this is very much thematically related to what blockchain is all about, which is economics, statistics, and programming. And programming means just instruction, being able to tell systems how to do things. Thinking about those three pillars actually becomes very powerful for people coming into the workforce and considering what their options are career-wise, because incorporating those three things can lead to a variety of paths within any business. So we're not just talking about banking jobs, we're talking about jobs in general. And I think what digital assets and Bitcoin does is kind of wake people up to the fact that there are many more options out there than just the traditional paths that, by the nature of being traditional, they're becoming a little outdated.
Frank, I see you nodding your head. What are your thoughts on it?
So from my standpoint of what I'm seeing, or kind of the trend is, traditionally, you had companies, whether it's financial institutions or whatever it was, you wore one hat. You had one hat if you were, let's say, in loan operations or your deposits, and you that's all you kind of geared towards. And now the move is becoming more, you're wearing more than one hat. And you're going to have the ability to do that because of the technological advancements and knowing technology a lot better and getting involved in that area. I think companies are more and more, I'm not going to say forcing their employees, but the employees have the opportunity to cover more than what they used to. And with the technological advances, have the ability to do that. And I see that even from a recruiting standpoint at the universities, more and more is being emphasized in terms of being involved on the technology side, data analytics being a huge item, especially in my world. We're having that basis, and it's just going to create more opportunities, and companies are going to, the traditional employees, it has to shift their mindset to that, to be able to be involved more on the technology side and also be able to cover more ground than what you traditionally were used to do.
David, any thoughts?
I mean, there's good news for the 100,000 bankers that are going to lose their job. The cryptocurrency industry is hiring very quickly. I mean, I saw a statistic the other day that said the amount of wealth created from just the Bitcoin market cap exceeds now the total amount of venture funding ever written. So if you add up all the venture funding that's ever been written into any startup or deal, that's the amount of value in 10 years that Bitcoin has created. That money is being invested effectively across the people who hold the Bitcoin. So companies and startups, there are literally tens and tens of thousands of open job positions across the cryptocurrency landscape. They are growing dramatically and quickly. I think Miami's been a big beneficiary of some of those jobs. I read some headlines of several companies moving here in the past 6 months, bringing thousands of jobs. That's going to continue to grow. We're scratching the surface of how big digital currencies are going to be. I mean, we're less than 1% adoption of the users, and then of those users, they have less than, on average, 5%, and that's being generous, of their net worth invested into crypto. So there's 20x growth just in the existing user base, and then there's 100x growth in new users of this stuff. So I think you're going to see a ton of job creation here, and it's actually going to be spread across many different sectors and industries. I mean, I'll pivot to the kind of what's the opportunity for Miami here since we're running out of time, but first off, Mayor Suarez has done an amazing job recruiting businesses here. There's very specialized knowledge that comes from working in cryptocurrency. The people who are starting the next generation of cryptocurrency companies, they start out as entry-level employees at older cryptocurrency companies. So if you're in the first 500 employees at Coinbase, which IPO'd this year for $100 billion, just on that namesake alone, you can raise money, build a product, hire a team. So attracting that talent to Miami is really important. Likewise, also on the mining side of Bitcoin, which touches the industrial capacity of the country or of the world, there's roughly $40 million a day being mined every single day. The cost inputs to mine are energy, silicon, semiconductors, data centers, all of the core infrastructure that America needs to be technologically savvy is what you need to mine. So there's a huge amount of money transferring from the Bitcoin ecosystem into those industries, and if you work in this room in the energy world, you should be actively evaluating the Bitcoin mining opportunity for your firms and companies. So I think that there's a gold rush that's happening here, and it's going to bring us into a golden age of economic development and industrialization.
So the Oracle here is telling me I have 30 seconds left, and I'm sure the World Strategic Forum is freaking out because they thought I'm going to overtime. I am not, I assure you of that. So normally we like to go to Q&A, but this was a very active panel. So what I will say is I'm sure the brilliant gentleman here can give about 5 to 10 minutes afterwards. We'll be in the lobby, etc. If anyone has any follow-up questions, if you want to see David's, quite frankly, unbelievable evangelism, you are very good at this. Please see us afterwards, but let's have a round of applause in the final 5 seconds we have left. Cool.